Good afternoon, everybody. My name is Mark Hubbard. I'm the craft beverage campaign manager with OnMarket. And I'm very pleased to be joined today by Guy Greenstone and Justin Joyner, the co-founders of Stomping Ground Brewery. I'd like to thank you all for your attendance today as well. So we're just a couple minutes late. We're just getting presentation up so that you can see all the lovely things that Stomping Ground is getting up to. Today we'll start with a presentation by Guy and Justin. And then we'll open it up to a Q&A, and you'll have your opportunity to get your questions answered directly by the founders. So with that, Guy, Justin, over to you.
Thanks a lot, Mark. Thanks, Mark. Really appreciate it. Good afternoon and welcome, everybody. It's fair to say, Guy and I have been blown away with the support so far with the expressions of interest. So it's so great to see so many of you online for this chat. By way of introduction, my name's Justin. I'm one of the co-founders here at Stomping Ground. My role in the business is operations director, which essentially means that I oversee the hospitality side of the business, as well as the people and culture team, and also work really closely with our marketing manager, Abby, on the marketing side of things, particularly with partnerships and the venues. My business partner and co-founder, Guy, is also here.
Hello, everybody. So, my name's Guy Greenstone. I'm the managing director, and I look after effectively the rest of the business, I guess, which includes finance, brewing operations, where Asher Hall reports in to me, our head brewer, wholesale sales, as well as Abby, who's also in the room here with us. I have a line through to her for the marketing side of things as well.
So just to give you a bit of an outline about what we're going to cover today, we'll start with a bit of a chat about where we've come from and how we've got here. And then we'll move on to a little bit about the structure of the business, the various components that make up the whole. We'll talk a little bit about the team and then explain how it all sort of comes together. And finally, we'll get to the crux of the conversation, the crowdsource funding raise that we're all here to talk about. And when we discuss that, we'll talk about why we're doing it, what the funds will be used for, what we think the growth opportunities are, and what you as an owner of Stomping Ground will receive as part of the ground crew. We do need to preface all of this by saying that all investments carry risk, and you need to read all the disclosures in the deck that you would have received and get financial advice if you need to. So let's get into it, Guy.
All right. So I guess the best place to start really is way back in 2008 when we opened up the local tap house. We wanted to do it. We wanted to open up a venue that really showcased beer. We'd fallen in love with beer, and we wanted to create a venue that really showcased the things that we loved about beer in an environment that was a neighborhood venue that really brought everyone along for the ride. And we kind of wanted to change the way people asked for beer in Melbourne. Rather than asking for beer by brand, we were really sort of dreaming of a time where they could ask for beer by style. So what have you got in the way of IPA? What have you got in the way of a sour? What have you got in the way of a imperial stout? And the response to that was fantastic. And then in 2009, a year later, we opened up a pub in Darlinghurst, also the local tap house. And then a couple of years after that, we started GABS, the Great Australasian Beer Spectacular, which was, again, all about showcasing the best beer that we could possibly find from all over the country. And, we'd had these different events at the tap houses, and finally we struck this idea of creating a beer festival that really showcased the creativity of brewers and celebrated beer in a really fun environment. So so GABS was born, and then we grew GABS over the next sort of 10 years to the point where we were in 4 different cities: Melbourne, Sydney, Brisbane, and Auckland. We built it up to about 60,000 attendees across those 4 cities, and we got to the point. But then in 2016, so our business partner at the time, Steve, had been living in America. And he had this, he was really keen to open up a brewery, and we wanted to sort of put everything we'd learned about consumer preferences for beer into practice, because we figured we really knew what consumers were looking for, and we wanted to create a brewery that really celebrated Melbourne's culture and really kind of brought everything that we'd learned about consumer preferences, and create a beer that was uniquely Melbourne, and we called it Stomping Grounds. We wanted to bring years and years ago, in Collingwood, there were more breweries here than anywhere else in the country. And over the years, they'd all kind of amalgamated and consolidated and turned into one big, massive brewery, which is still in Abbotsford. And we wanted to bring brewing back to its original stomping ground. But also a stomping ground, it's an old familiar haunt. It's a place where people feel comfortable and at home. It's got a sense of nostalgia about it. And we wanted to really capture that sort of authenticity behind Stomping Ground and the beer. So Stomping Ground was born, and we opened that in 2016, March 2016. And that's when we started brewing, and we opened the doors to the public in August 2016. And so, yeah, we've been operating Stomping Ground for effectively 10 years. Cool. Slide.
So what about our reason for being, Guy?
Oh, yes.
It's underpinning everything that we've done from the early days of the tap house. We've had this thread that's run through the festival into the beer halls, and still remains the reason we get up every morning and go to work, and hopefully the reason that some of our team come to work, and hopefully it's some of the reason that people choose to drink our beer.
Yeah, so it's people having a strong sense of purpose. That why is really, really important to any organization, and our sense of our purpose is really to share our love of great beer with as many in our community as possible through consistently exceptional experiences. I know that's a bit of a mouthful, but we bring it up when we're interviewing people. We bring it up all the time, because when you connect to a sense of purpose, it really kind of drives a lot of the things that you do, and people get that extra, you get that extra zing from staff, from consumers, from customers alike, when you really have that strong sense of purpose. So it's pretty central. When we do performance reviews with staff, we always come back to our sense of purpose, to what sort of drives us, and this is what drives us. We really want to share, because it's all about bringing people along for the ride. Love is a word we use because it's full of passion, and we really want people to be passionate about what we do. We talk about great beer because we want to sidestep the whole issue of craft beer. Community is a massively important word to us, because there's so many different levels of community. The Venn diagram of community, it's your own little family. But then on top of that, it's also your neighborhood. It's also beyond that, it's, the city in which you live. And then it's also you're a global citizen. So as a global citizen, you want to have, a view to sustainability and, environmental kind of, standing up and being counted and doing your part. So community is massively important. And then we talk about consistently exceptional experiences. We really want to aim for, shoot for the stars and create exceptional experiences. And we want to do it consistently. It's no good if you come in one day and you have a great experience and then the next day it's no good. We want to create these consistently exceptional experiences. And experience is such an important word, because it's not about the things, when you're on your deathbed, it's not about the things you've accumulated. It's about the experiences you've had. So we want to facilitate great experiences at our venues with our beer. And that's basically our sense of purpose.
So let's talk a little bit about the components of the business and how it all sort of comes together. First of all, from a venue point of view. So our venues represent about 60% of our revenue. And they play a crucial role for a few reasons. But firstly, the reason that the venues were a crucial part of our strategy from the beginning was that at the time we saw a real opportunity to bring our hospitality background to a brewing setting. And we wanted to create a space where almost from every seat you could see the brewers doing their thing in the brewery. You could smell the hops on brew days. You could engage with the staff and touch and feel the ingredients and really be immersed in the experience. And at the time in 2016, that wasn't something that really had happened in breweries yet. There's some amazing ones that have come since, but at the time, most of the hospitality operations at breweries were an ancillary part of the business that was there in a limited fashion. They tended to be only open for limited hours each week. And we saw a real opportunity to bring that full lunch and dinner 7 day a week food and bev offer. And the concept was that we wanted to bring everybody in, not just those that were into beer. We didn't want a situation where if you were right into beer, but most of your mates weren't, that it would be difficult to bring a crew into our venues. We wanted to have cocktails and spirits and wine and food and be family friendly, so that you could bring the kids along as well, and really create an inclusive environment that everyone felt welcome in. So that's what we set out to do with Collingwood. We've now got 5 venues. 3 of those we operate ourselves. That's the 2 Stomping Ground beer halls and the local tap house that we spoke about in St Kilda. We also have another 2 venues that are out at the airport. One is a Stomping Ground venue in Terminal 3, which is the Virgin Terminal. And we also have a local tap house venue out there in Terminal 1, which is the Qantas Terminal. And those 2 venues are operated under license by our partners with Delaware North, which is a great relationship that we have been, we've been working together with those guys since probably 2018, 2019, around then, after we did a pop-up at the airport and then decided to co-bid on a tender to get a venue in the terminal that was Australia's first brewery at an airport, that we're really proud of as well. So that's the composition of the venues at the moment. They're a great opportunity for us to talk directly to our consumers, so we can trial beers there and really engage with people, get direct feedback straight away. We like to enable our staff with as much information as possible, so that people that are really interested in learning a bit more about beer or the process are able to do that. But overall, they are just inclusive spaces that we hope that people feel comfortable in and really enjoy the experience of our beers in those environments. The other 40% of the revenue comes from the brewery operations guy.
Yeah, so we're effectively an integrated business, and we'll talk more about that in a minute. But we've got the 2 components: the hospitality component, and then the manufacture and wholesale of beer component. And the brewery, we've basically got the production side, and the bulk of our production happens in Collingwood, where we have a 30 hectolitre brew house, 3 vessel. We've got about 20 fermenters, and we're capable of doing just over 2 million litres a year, up to 2.5 million litres a year with a few more fermenters. We've also got a brewery in Moorabbin, which is a smaller brewery where we do only keg beer, and that's more for collaborations and sort of fun limited releases, etc. And we've got, as JJ mentioned, a really small brewery at the airport, which was the first brewery in the Southern Hemisphere at an airport. We've also got some outsource capability, which we've brought online over the last 6 months. And that just gives us this sort of plenty of headroom and plenty of capacity. So as we grow, we can continue to grow, and we can continue to produce great beer without necessarily having to spend a whole bunch more CapEx. So we've got that capability as well, which means that we can produce a whole bunch of fantastic beers. So next slide, please, Jojo. So we've got a whole bunch of different ranges of beers, but at our core, we've got our Stripes range, which includes our Gibb Street Pale Ale, which we think is the best pale ale in Australia. We might be biased. It's a quintessential American style pale ale. It's really hoppy, 5.2% and delicious. There's the Big Sky Hazy Pale. There's the Hop Stomper IPA. There's the Laneway Lager, which is a 4.7% Hellas Lager, which is really super drinkable. And then we've also got our Footloose Pale Ale, which is our non-alc offer in that range. Gibb Street's named after our home on Gibb Street in Collingwood. And they all kind of appeal to different parts of the consumer market. Aside from that, we've got our Stay Grounded range, which is a bit more of a heritage type brand. It's a little bit more familiar and accessible, easy drinking. But then we've also got our Into the Woods series, which is really more about the pointy end. It's about great brewing credentials. We have a lot of fun with it. We kind of use interesting ingredients and create some amazing beers, sometimes in collaboration with other great producers as well. We've got our Smash range, which is really kind of the non-beer beer that we have, which allows allows people who aren't necessarily traditionally into beer to still have a product for them. So our Passion Fruit Smash is a great example of that. Of course, we do a whole bunch of limited releases. And they can be collaborations with venues. They can be about the style. They can be about a time of the year, and they're a lot of fun. They allow some creativity and really kind of are things that we can talk about in social media. Giving Ground is another one of our ranges, and that's where we do more sort of purpose-driven type of releases that support certain initiatives. We've done like a Movember can. We do Pride every year, and the Giving Ground is really about giving back to the community. Where am I? Okay, next. So our beers, we love them, but you don't have to take our word for it. We've won a whole bunch of awards that we're very, very proud of as well, including 8 Champion Brewery Awards, 4 at the Queensland Awards, 4 years in a row, Champion Large Brewery. We've also won Champion Large Brewery at the Indies. We've won Champion Victorian Brewery at the ARBAs, and we've won Champion Australian Brewery in the medium category at the ARBAs as well as a whole host of trophies for various beers, etc. And it's not just the beers that we get awards for as well, but the venues have got some awards as well. We've won Best Brew Pub in Australia 4 times with Beer and Brewer magazine, which we're really proud of. And it means that what we're setting out to do is resonating with consumers and with people out there in the marketplace. So, and Asher, of course, won Brewer of the Year a couple of years ago, which we were very proud of. That's him reading about himself, which he's not really like that, but it's a good photo. All right. So I guess the next one, JJ, if you head into
Go back to
yep. So brand and marketing is another really important part of our business, and I guess the main thing to say about this is we sort of we're really focused about entrenching ourselves in the Melbourne and the Victorian community. So we do a whole bunch of collaborations and partnerships with some really amazing Melbourne-based organisations, including North Melbourne Football Club, which we've just renewed for
another 2 years.
Another 2 years,
Yeah.
with Melbourne United, which is the Melbourne basketball team. We also are in the arts and comedy space. So you probably hear it here first. We've just signed on for 3 years with Melbourne International Comedy Festival, just in time for their 40th anniversary, which is a huge coup for us, because before that they had a non-Victorian, non-Melbourne brand that was supporting them, and now we've signed on for 3 years as the beer partner for the Melbourne International Comedy Festival, which is the second biggest comedy festival in the world. And aside from that, we also support a lot of grassroots things. Like, we're very proud of our connection with Scarf community. We're very proud of our connection with Comedy Republic, and also Red Stitch Theatre. So it's really about supporting some of the sort of really significant cultural components of Melbourne's culture. We're also more recently right into the music side of things. Palace Foreshore, you will have seen, St Kilda Festival. We were official beer partners for both of those events as well. Excuse me. All right. So sales and marketing. In terms of sales and distribution, in terms of our access to the market, we really are sort of multi-channel. Broadly speaking, we've got on-premise market and we've got the off-premise market. The on-premise market is really driven a lot by keg beer, and we partner with some of the best venues across Melbourne, across Victoria. We've got something like 368 taps across Melbourne and Victoria. And then on the off-premise, which is retail outlets, we've got relationships with the biggest retailer in the country, which is EDG, also known as Dan Murphy's and BWS. Also CLG, which is Coles Liquor Group, with all the liquor lands. And also through ALM, which supplies all of the independents across Melbourne and Victoria. And we're the number one independent brewery through ALM channel. And we also partner with Paramount as a wholesaler as well. And
I think it's worth backing over that, the keg situation there, because we definitely over-index in kegs compared to other breweries our size. And I think it started sort of organically and almost not by mistake, but organically, given that we didn't have a packaging line to begin with. So we had to go out there and get taps. But some of those relationships that we started then endure now, and it means that we have a huge keg presence, particularly in inner Melbourne, but also across Victoria, which means better margin, but also it plays a huge role with the brand as well, because we firmly believe that beer brands are built on premise. People go to the pub. It's a lot easier. It's a much lower barrier to entry to try a beer by just buying a pot of it than it is to commit to a 6-pack in a bottle shop. So that presence that we've got and the areas that we're available on tap really accelerates the wholesale growth as well, because people come in and try the beers and then head to the bottle shop and remember that beer and choose it over others in the bottle shop.
Yeah, we believe that brands are built on premise, so that keg beer lower barrier to entry really helps us build the brand. Across all of the retail outlets and on premise, we've probably got about 3,275 points of distribution, or pods, right across Melbourne and Victoria as well. Supporting all of that is a head office function where our marketing team sits, where our finance team sits as well. And it all comes together, the venue side of things, the production and the marketing and the sales side of things, they all come together to create this model. It's a vertically integrated model where the different elements of the business work together in harmony, which creates a really amazing kind of model that for instance, in hospitality, you get paid over the bar straight away. So you don't really have debtors, you get paid immediately. Whereas in the brewery, it's exactly opposite. You have to wait for your money for ages. So from a cash flow point of view, they work really well together symbiotically. Also, about 15% of the beer that we produce actually goes to our own venues, which means that we kind of are a little bit more resilient to any kind of changes in the market. And we've kind of got a little bit more of sort of a ballast against sort of market changes. And they also, the two elements of the business market each other as well. Our venues are our best marketing tool for the brand. And then also our brand out in the marketplace is a really good, markets our venues really well as well. And aside from that, while they're quite related, they do operate differently. They've got different dynamics in terms of industry, and so they really diversify and mitigate our risk to a large extent. So it's a really good model. It's tried and tested. It's been done for probably centuries, but we feel as though a lot of people can do brand and production really well, and a lot of people can do venues really well. We like to think that we are doing both really well, and the two work really well hand in hand.
Right. So a little bit about the team. We have a small board, just three of us, Guy, myself, and Mike Green. Mike's our founding investor who's been with us on the whole journey, and has been a vital part of the business from the beginning, and brings a level of experience from a governance point of view that we certainly didn't have internally, and continues to make a massive contribution to our business. So that's the three of us on the board. Our management leadership team here is made up of 5 people who have lots of industry experience. Asher is particularly is a leader of the industry. Fab has over 15 years in craft beer in Melbourne. Abby has worked for multiple craft beer brands as well, and Shani has been a vital part of our team through last few years, and really is a driver of the culture within the business, which is something that is hugely important to us. Tambi has joined us in the last 12 months or so, and is leading the finance team, and is doing an incredible job as well with her years of experience in FMCG, as well as some entrepreneurial experience as well. So she's been an amazing asset to add to the team. The org chart, we don't need to go into a great deal of detail. Probably you can see that in the deck. But you can see that the board at the top there, and then Guy and myself as the exec team, and then the teams below that. The total headcount on the team at the moment is about 155, 160. And that, when we talk a little bit about adding venues and that sort of thing later, that'll grow a little bit over the next couple of years to over 200 people. And we spend a lot of time on training and development, and we're really, really proud of some of the retention that we've got from team members that have been with us for, in some cases, 18 years, or in one case, 18 years anyway, and but lots of sort of 7, 8, 9, 10 years plus that we like to celebrate, and they're the examples that we're super proud of. Now, should we get into a bit of a discussion about what we're going to use these crowdsourced funds for?
Yes, absolutely. So, yes, we've got some. Obviously, I'm sure everybody's dying to find out, why we're crowdsource funding. Why we're raising capital. So, there's a few. I'll just quickly list them, and then we'll go into a bit more detail. But the first is new venues. Then the second is investment in sales and marketing. The third is to really bolster up our online store and direct to consumer. We've got some balance sheet work that we want to do as well, and then we also want a little bit of capex for our venues and the brewery, just to do some fun stuff there as well. So and important stuff. So JJ, why don't you talk to us about the venues?
Yeah, so the new venues, the 2 new venues over the next 3 years is the plan at the moment, and we, as we said before, we really believe in venues and the important role that they play in the business and in driving the brand more generally. So we've done a whole heap of work with a company called Spectrum Analysis to help us gather some data to make really strategic decisions about where we're going to place these new venues. And they've put together a bunch of maps, Mango maps of metropolitan Melbourne and the wider regional Victoria as well. And now when we're assessing a site, we can send them an address and they'll send us a 20-page document analysing the demographics of the area, showing us maps of various drive times from that venue, and really enable us to hone in on the locations that we're going to get the most bang for buck for.
I'll just jump in there. So they looked at things like socioeconomic index, housing, whether it was mainly apartments or houses, to really kind of try hone in on who our market is and where are they, and therefore where should we be putting venues, taking competitive intensity into account, geography into account, sort of ethnic background comes into play as well in terms of habits and all these sorts of things. So it was a really worthwhile exercise and allows us to really kind of target geographies that we're going to have the best chance of success.
So the first one, which we're not really allowed to tell anyone about, but I figure no one here's really going to talk outside school, are they? We're about to sign a heads of agreement on a new venue in Geelong, which we're super excited about. You can see some renders there on the left. They are part actual floor plans that have already been designed, and then part they're overlaid with a bit of AI to bring them to life. That is a huge opportunity in the CBD of Geelong that we're really excited about, that will open, all going according to plan, around about September, October this year. The subsequent venue is one of several sites that we're looking at the moment. We're working with developers that have approached us with various sites already, and working with Spectrum as well. And it'll come down to the best opportunity and the timing being right. Obviously, first of all, we'll bed down the first one, and then we'll move on to the next. And importantly, the structure of the business is such that we can add these venues without adding significant cost to head office. We have capability in finance and in people and culture, in marketing, to be able to roll out new venues with owning a small sort of additional cost at head office. So that gives us confidence that these things can really contribute significantly to the bottom line, as well as pushing our footprint into new geographies as well within Melbourne and Victoria.
Yeah, a couple of little things to add to that is, first of all, Geelong is in a growth corridor. It's one of the fastest growing areas of not only Victoria but Australia, and it opens up not only Geelong itself but also access to that whole surf coast, not only in terms of the venue contribution but also the brand. So it helps us really grow the brand into that growth corridor. Yeah, so that's part of the reason for that choice. It really helps us grow the brand. And we have fantastic relationships with developers and real estate agents who are bringing us opportunities all the time. So it's really about assessing the best that really fit our strategic plan. And just to reiterate what Justin said about the head office and our infrastructure, we've got the structure to be able to add a couple more venues without adding a lot of cost to our overall operation. So all of the bottom line drops straight to the company bottom line as well, the majority of it anyway. So next is investment in sales and marketing. So growing the brand and growing the volume and growing our beer is a key reason that we're raising capital at the moment. We want to invest in wholesale growth. In order to do that, you need to invest in two things. You need to invest in the push and the pull, which means the sales component and also the marketing component. So great sales will get it on the shelf and it will get the distributions, but then we need to pull it off the shelf as well. And so pulling it off the shelf is below the line marketing activity like trade marketing to really support those new distributions as well as existing distributions, but also the marketing activity to create that pull. So above the line media, partnerships, events, pop-ups, all of these things that really drive the awareness of our brand and make consumers familiar with it, love it, and want to buy it when they see it on the shelf, they see it in the tap, and so that's a significant part of our overall investment. Which I suppose is it's a good time now to just quickly jump into the state of the market. And a lot of people have asked in their questions, is there growth in this market? Because there's a lot of doom and gloom out there, and a lot of people talking about declining alcohol consumption, and all of that is true. I've been in the beer industry for the best part of 30 years, since I started with Lion back in 1999. And what I can tell you is that beer has been in long-term steady decay for 30 years, and it's probably a little bit more pronounced right now. There's a couple of exceptions in the world. Africa and I think Asia are growing quite quickly, off a smaller base, but the rest of the developed world, alcohol consumption is in decline. But for us, there's about 100,000 liquor licenses across Australia, 25,000 liquor licenses in Victoria, and we're in about 1,000 of them. So we're in about 4% of the liquor licenses across Victoria. Even though I know some of you are thinking we've got over 3,000 distributions. Yes, we do. But some of those, you've got multiple distributions at one outlet. So we've got a lot of headroom there from an outlets point of view. On top of that, the Australian beer market is about 2 billion litres. The Victorian market is about 500 million litres. Independent beer, so not the big guys, is about 10% of that. So call it 50 million litres in Victoria, and we're about 4% of that. So we've got heaps of room for growth in terms of our penetration. We were talking about ALM. Our biggest selling beer, which is Gift Street Pale Ale, is still less than 50% penetration through ALM, which is so there's plenty of headroom for us. And also there are some opportunities to really hedge. So the no alcohol and the low alcohol products are really growing, and we've got a horse in each one of those races as well. And we can develop beer and make great beer to really suit those changing trends. Aside from that, there's other markets as well. So we're not interested in going interstate just yet. It's not on our short-term horizon, but it's not a never say never, because there is opportunity to go beyond Victoria into other markets as well, whether it's New South Wales or whether it's Queensland, even WA, and South Australia. So there are opportunities there, and if we were to do that, we would want to do it in a really meaningful way rather than just a dabble. You really need to go in quite a hard way. So that gives you a little bit of insight into the state of the market and whether there's growth left in this market. We think we can double, triple just in Victoria before we get anywhere near a ceiling, even in a market that's either flat or not growing.
One of the other uses of funds is going to be, excuse me, investment in our direct-to-consumer channel, which is our online store, which has had an interesting life. It was born out of necessity in COVID with a pretty limited Squarespace website that we threw together in a hurry, and it grew rapidly through that period, obviously. Over over the time, it's matured it has gained some maturity as a channel for us, and we've upgraded the website to a Shopify website. We've added some capability there and have someone managing it now. And what we've seen over the last sort of 12 to 18 months is significant growth in that channel. But we really feel like it remains a massive opportunity for us, and that businesses that do that channel really well can make it a hugely profitable part of their business, which is something that we're aspiring to do over the next 12 to 18 months as well. Things like subscriptions, limited release programs. We've got a loyalty program that we'll be launching this year that'll be seamless, and people will be able to use it on the online store as well as in the venues. Those sorts of things to really develop that channel are plans that we have in the making as well.
And then a couple more things just to add to that. Balance sheet. We spoke about the balance sheet. One of the things we really want to do is improve our debt to equity ratio by reducing some of our borrowings, which effectively reduces risk. It also frees up some cash flow to really reinvest in the business, and it gets our balance sheet to a really kind of strong point. So that's one of the things we want to do. We've been fortunate to have really great shareholder support from existing shareholders, particularly Mike. I don't know if you're online there anywhere, Mike, but thank you. So he's helped us get through those really hard COVID times and the recovery out of COVID, which was really challenging for the entire industry and us as well. And you know, we kind of ended up with a little bit more on the borrowing side than we would have liked, and we want to fix that now. So this is an opportunity to really kind of strengthen the balance sheet and create this war chest that allows us to just really grow and take advantage of this momentum. I'll talk more about growth in a moment. Aside from that, some capex in the venues in the brewery. Depending on how much we raise, we really want to kind of do a little bit of a spruce up for the venues, as well as invest a little bit in some packaging line sort of upgrades in order to give us a bit more flexibility with format options and that sort of thing. So, have I left anything out, JJ?
Don't think so.
Okay.
All right. Moving on to, apparently I'm not appearing on screen when I'm talking, so I'm not sure what that's about, but we'll perhaps sit together for the Q&A. So
can everybody see JJ, or has he just been invisible the whole time?
I've been invisible.
Yeah, no, it'll be focused on your presentation at this point, but stick around for the Q&A, everybody, and you'll get to see these gentlemen in all their glory.
Well, that's a pity because he's better looking than.
All right. Let's have a chat about the financial snapshot and where we're at the moment, Guy.
Yeah, no worries. So we've had some really amazing success over the last couple of years in what a lot of people know is a relatively challenged market because of the recovery out of COVID. Our wholesale side of the business has been growing for the first half of this financial year, 30% wholesale growth, and last year, FY25 was 25% wholesale growth in a market that was relatively flat at best. In FY25 we achieved $23 million worth of revenue, $14 million worth of revenue in the first half of this financial year, and also $25 million of revenue just under in the last 12 months. For a full 12 months ending at the end of December. We've had some modest growth in the venues in terms of top line growth, but really strong growth in the bottom line, and that's through some cost reduction. Our cost of goods is in really good shape. Our rostering is in really good shape, and we've been really disciplined with the way we're conducting business. So more of what we're taking over the bar is ending up in the bottom line. And the structure that we've got in the head office that we talked about before has really improved in terms of capability, and the structure is in a really, really good place. We achieved $1 million worth of EBITDA in FY25 and just approximately 1.6, just under 1.6 mil in the first half of this financial year, which we're kind of pretty stoked about, and we know that there's a lot more room to grow, as I alluded to before. While we're not supposed to really talk about projections too much, we're very confident that we can continue the growth trajectory of wholesale. We're going to add more venues, and also when we haven't penciled in 30% growth year on year. I think that's probably going to make a rod for our back. We've been a lot more conservative in our projections, but we are very confident that we continue to grow. So have I covered everything, JJ, there?
Yep, that's good.
Okay, so why CSF? Why are we doing crowdsource funding? So the reason we want to do crowdsource fund is growth that we're trying to achieve. It costs capital. It's very hard to grow without putting money into the business, and we feel that putting equity into the business rather than debt is a far smarter way to go about it. Debt is the thing that often brings people unstuck, and we know because we've gone through a period of time where we probably had too much debt, and we've really reduced that debt quite significantly over the last few years through shareholder investment and through just really good trade. So we really want to get to a point where our balance sheet is really strong, and so getting equity into the business rather than debt is the way to go for us. Crowdsource funding also allows us to build a community. It allows us to have potentially 1,000 or more ambassadors who are kind of out there in the community advocating for our brand, asking bottle shops and venues to put our beer on tap or in the fridge. And it also importantly allows us to remain sort of masters of our own destiny rather than being beholden to a PE, private equity firm, or a strategic investor that sort of starts calling the shots. We want to be able to really stay true to what we're all about and be authentic and really continue to be who we are and support the community and have a community of people who are like-minded who can come along for the ride with us. Did I leave anything out, JJ? Equity in the hands of beer lovers as opposed to just so that's important. What else are in my notes? Okay, so that's why crowdsource funding. So we really kind of think that this is a really way to go. We might get to it in a Q&A, but we did have a dabble at raising capital previously. We got really close. It ended up not quite working out right at the 11th hour, and we learned a lot from that process. We learned that that we want to sort of stay in control. So we'll talk about that later on as well. Okay, valuation in shares. The next thing to tell you about is that the offer is for $1 per share, and the way the crowdsource funding is kind of put together makes it really simple. $1 per share. All the shares are the same class. They're ordinary shares, ours, yours, everybody's. There's no preference shares or different classes of shares. Anybody who invests is in the same boat as the rest of us. So it's all shareholders on an equal footing, and all the shares carry the same sort of rights. What else do I want to say? Yes. When we valued the business, we really kind of did it in a way that we really wanted to make sure that everybody who was investing had the opportunity to benefit along with us. So we understand that the average completed crowdsource funding raise for alcohol businesses it has been an average of a multiple of 6.9 times revenue. For completed CSF raises for alcohol businesses that have revenue of greater than $10 million, that average is 4.1 times revenue. We're going out to the market with a multiple of 2.3 times revenue, which is far lower than those averages I quoted. Why are we doing that? We're doing that because we want people to come along for the ride with us, and we want people to benefit at the same time that we do. 2.3 times revenue puts the enterprise value of our business at $52.5 million. We've got borrowings of roughly $4 million, which means that equity value is $48.5 million. And so we really wanted to fairly value the business. We've got 3 amazing venues. We've got a heads of agreement out for another one. We've got a great brand, strong growth opportunities, all in the pipeline. And we're providing value for our shareholders so that we can all benefit together. So did I leave anything out there, JJ?
I don't think so.
Liquidity, it's important to talk about liquidity. That's some of the questions that have come up a lot in the expressions of interest is, can I sell my shares? How do I make my money back? All those sorts of questions. So you're not allowed to sell shares for the first 12 months, and then after that you can. But it is important to know that after 12 months, there's liquidity is not an easy thing to achieve necessarily, and you do have to offer the shares to the company, and all other shareholders have an opportunity as a preemptive right to buy those shares. So liquidity is not is something that you have to be aware of. And so, as a shareholder and an investor, you should really be thinking about this as a 5-year time horizon, because if you're thinking of it as just a 1 or 2 year, 3 year sort of thing, this might not be the investment for you. You want to be in this for the time horizon with us. It's not to say you can't. It's not it's not impossible. It's just not super liquid. So just be aware of that. Definitely read the investor rights and the shareholder rights pages. They apply to all of us. So in terms of some people have asked about returns and ROIs. It's really hard for us to give you ROIs and return on investment because we're not really allowed to give projections. It's part of the CSF rules that say you're not allowed to actually give any statements about what your future earnings look like. So with that comes challenges in saying what the ROI is. But we are confident that we can grow the business significantly. And we feel, for instance, we can add 2 more venues. We know that our venues generally, revenue per venue is roughly between $6 and $7 million per venue. We know it costs, we know that, roughly $750 to $1 million of that drops into the bottom line. And we know that we've got the infrastructure to support that. We know that we can significantly increase our volume over the next 5 years as well. So then how do you get your money back, or how do you actually make a return? That really comes down to the next sort of layer of capital where a liquidity event might happen. So private equity, family office, strategic investment are all opportunities for the next layer of capital to come in for that next phase of growth. There's also the opportunities for trade sales or a buyout. There's nothing on the horizon as far as that's concerned, but it's definitely not out of the question. And then there's obviously IPO, which is a public offer. It's possible also that none of those things happen, and then in that case, our plan is just to build a really strong, profitable business that eventually moves toward a dividend structure. But bear in mind that we're unlikely to be paying dividends in the next 5 years because we'll be investing everything in growth. And that's what our plan is, to really grow the business and create a really strong, profitable business. Hopefully that answers a few questions.
Lastly, the investor benefits and the ground crew community. So a couple of things on this. You will have seen the table. You will see that the perks scale up based on your investment. But the crucial part of this is that we have engaged Craig Williams, who, those of you on the call that are part of the beer industry would know Craig from his time at Gabs and Crafty Pint and other things. We've engaged Craig to run the ground crew essentially. So we'll be introducing him in the days after the raise closes to everybody that's joined as an investor and therefore become part of the ground crew. And he has already put in an amount of work and is continuing to work on really creating a community that engages with everybody that's part of it. So anyone who's a member of the ground crew will be invited to a WhatsApp group to communicate with each other and with us. They'll have access to money can't buy experiences and dinners and the like with brewers, depending on their level of investment. But also there'll be input in everyday decisions that we make. There might be beer names that need deciding, and we'll put a poll on the WhatsApp group. There might be, menu changes happening in the venues. There'll be opportunity to get involved potentially in input or design input on merch and things like that. So we're really excited about the power of this community and what it's going to create, not just for us, but for everybody who's a member of it. We've got an online platform that we'll be using to manage it from a sort of behind the scenes point of view. So it'll hopefully be a seamless way to engage with us, and also to use those perks, whether they're on the online store, or in the venues, or what have you. So I think that probably sums up the presentation at this stage, Mark. I think we, just so everybody knows, a lot of the content today was driven by questions that have already come up along the way from people through the OnMarket platform and others. So hopefully we've been able to answer a few things for you, but we are here and ready to for Mark to fire some questions at us now.
Oh, and also it's worth just noting that the offer document is available via the platform. I'm sure everybody's already got a copy of it. And so yeah, remember to go and look at these things in your own time. It has a lot of detail in it as well. JJ,
Thanks, guys. That was very illuminating. I'm sure people will find. Just wanted to correct the last thing you said, Guy. The offer document is available now for investors that qualify for wholesale for over $10,000 of investment.
Gotcha.
And it'll be available for all EOI registrants when the offer opens in private deal room, which means the EOI registrants have the opportunity to invest at that time on Thursday. So everybody, you've gotten a bit of a sneak peek into the financials of the company and the capital structure and their use of funds, and that's all really good stuff. I'll also tell everybody we will have a link on this presentation and Q&A on the landing page on the OnMarket platform. So those of you that want to review or look at things again, that'll be there for you. So now some of these questions that have been asked while you were speaking have disappeared as you've answered those as you progressed in your presentation, but we'll get on to what we have now. Hi, team. So is Steve Jeffers now out of Stomping Ground? Was this due to a buyout, exit, or something else? And has this left a hole in the team or in the balance sheet?
Great question. So Steve, co-founder with Justin and I, and very much massive part of the business and the business's history. He was really keen to pursue his other things. He's opened up another venue at the old Deeds site called Huzzah, which looks absolutely amazing. I don't know if anyone's been there, but I encourage them to check it out. Steve's still a shareholder, but he's no longer an active sort of executive part of the business, although he's definitely cheering us on. We've got a couple of beer taps at Huzzah, as well as he's got a whole bunch of other great producers on tap and in the fridge, etc. In terms of capability, we'll definitely miss Steve and his creativity, and he's always going to be a massive part of our history. But we're really fortunate we've got an amazing marketing team, and we have been really blessed with the people that we've got, and it's you can't ever replace someone exactly, but you can certainly have those capabilities brought into the team from other places. And Abby, who's sitting beside me, is amazing. Her team's amazing. So we're very fortunate that we've got some really great marketing chops and PR chops as well.
Next question in. I see the max investment can be done without registered as investor is $20K. How can we invest more, or is there any franchise option? I'll handle that one because that's a bit of a regulatory thing. Under crowdsourced funding, retail investors are limited to $10,000 investment. You can invest over $10,000 and up to no limit if you qualify as a sophisticated investor. There's a link on our landing platform to take you through qualifying and provide us with an accountant certificate that you do qualify. It's basically $2.5 million in assets and $250,000 in income to qualify as a sophisticated investor, and therefore not have a limitation on the amount you can invest in shares through this technique in share offers. Hi there. Could you please share, your short-term 2 to 5 year vision as well as your long-term 5 to 10 year vision? Thank you. Well, I guess you've done a bit of that, but maybe you just summarize your use of funds, the initiatives that you have initially, and then maybe the longer term view.
Sure. Okay, we'll go for 2 to 5 first. We would like to get 2 more venues within the next 3 years, both large format stomping ground kind of beer halls. We've already got one earmarked for Geelong, which you heard here first, and the other ones are earmarked also for Melbourne, inner city Melbourne, rather than regional Vic. And we've got some sites that we're assessing right now as well, with developers and with real estate agents. So that's on the venue side. On the wholesale side, continued growth. We've got new NPD in the market in the pipeline to release, but we've also got our existing brands, and we want to continue to grow that. We've got so much headroom to continue growing a brand in a really meaningful way. Very much focused on Melbourne and Victoria for the next short to medium term, and so I can't see us going interstate in a meaningful way, for the next sort of 3 years. Beyond that, then, never say never. In terms of the long-term plan, after 5 years, we hope to really be able to, am I allowed to say that? Double the business?
You're allowed, unless Mark censors you. Yes.
Yeah. So we think we can double the business over the next 5 years, for sure, in terms of revenue and profitability. So that's what we're focused on. Beyond that 5 years, then then it'll be the next layer. Then we'll continue to grow. Then we might actually consider, do we go interstate in a meaningful way? We're not going to look too far out from this state at this stage, but we'll see what happens. There might be some investment that comes in from the outside, whether it's strategic, whether it's PE, whether it's family office, to continue growing the brand. And we want Stomping Ground to be synonymous with beer in Melbourne, Victoria, and potentially beyond. So there's a lot more that we can do in this space. And when you think about some of the breweries that we look at that have gone before us, that we aspire to be like, I think Stone and Wood is probably a really fantastic example, because they're so entrenched in that Northern Rivers community, and we want to sort of be as synonymous with Melbourne and Victoria as they are with that region up there. And we think we're doing a pretty good job, but we also think that there's so much more that we can do.
Yeah, you betcha. It looks like the debt repayment would be to the existing shareholders rather than to the bank. Is that correct? Are there any other debts or payment plans in place for the ATO?
So we've got a debt facility from Mike, which is what we've shown on the balance sheet there at $1.615 million, and we intend to pay that out either partially or fully over the next 12 months. He's been fantastic to supporting us. He's put in a fair bit in terms of equity as well as have other shareholders as well. So we want to repay that. Give you a little bit of background. It's actually really interesting. I don't know how deep you want me to go into this, but in 2020 we had a loan approval to develop Moorabbin, and then on the and developers, the builders were due to start on the 16th of March 2020. And we all know what happened on the 16th of March 2020. The whole state went into lockdown and then repeatedly went into lockdown. Our bank then called us up and said, that approval that we gave you, we would just like to pause on that. And then so we went to the landlords at Moorabbin, and we said, hey, listen, the bank's kind of said they want to pause on that approval. Can we either get out of the lease and they said, no, you've got an ironclad lease. And we said, oh, okay. And they said, but we really want you as a tenant. We think you're going to be a marquee tenant and really good for the overall site. So we're prepared to lend you that money instead of the bank. But we're not a bank, so it's going to be on different terms to the bank, a higher interest rate and and shorter sort of time frame. So we entered into that sort of facility with those guys. So Mike then the maturity was it basically matured in December, and they were amazing, and they've been fantastic landlords at Moorabbin at Morris Moore, and we couldn't it couldn't be a better relationship. but they'd already had that for however many years, probably longer than they anticipated in the first place. So we basically paid that out with a loan that Mike sort of put into the business, and now what we'd like to do is pay Mike back and change that debt equity mix so that we've got more equity in the business and less debt, which will also free up. We were obviously paying interest. It was a 13% interest loan, for full disclosure, so that's an expensive loan. And so what we want to do is we want to remove that borrowing so it frees up cash flow, which we can then reinvest into the business. And that's that balance sheet sort of restructure that we were talking about. In terms of ATO payment plan, like many breweries, when they said you don't have to pay us excise and you don't have to pay us BAS, we accumulated this stuff through successive lockdowns. And then, like so many breweries, they said, okay, now pay us back. And that was right at the time where there was a margin squeeze because everybody, there was a cost of living going up, so all our input costs were going up, but people were sort of trading down in terms of what they were buying. So that made it really difficult. So we entered into a payment plan with the ATO, and we're almost through it. And we're really, I can't wait to see the back of that. But basically, we're in a pretty good place. I think we still owe them about 400K altogether, but that's on a pay. In fact, I forgot about that. We've got the NAB approval, right?
Yes.
Yeah.
I was trying to pass you a note.
No.
CSF not paying the ATO.
No,
the NAB is.
Right. So we've actually just we've put it in the offer doc as well, so it's actually clearly spelt out there. But we got an approval from NAB to pay out our the remainder of that ATO loan payment plan, and also the refinance our senior debt as well. So that's like a $3 million loan from NAB with 12 months of interest only, and then principal and interest being repaid over the next 6 years after that, which is really going to be a huge benefit from a cash flow point of view compared to what it's been over the last few years as well. So we're pretty thrilled about that. Obviously, NAB did their due diligence and looked at our financial statements and our projections, and we satisfied them that we're in good nick, and so that is due to settle on the 19th of March. So that'll be even before this round closes. So that's really encouraging. Almost forgot about that.
Blasted COVID. It's made a mess of so many things. On credit to you guys. It was such a disruptive thing for such a long period of time, and you've gotten your way through it. You've expanded your business. You've worked through all those bloody issues that period of time brought to the fore, and you've thrived coming out the other end. So well done. I think that's an important aspect for investors to understand, that the capability your management team has in building the business to where you've gotten to, with some bloody big challenges along the way.
Thanks, Mark. It felt like we were in crisis mode for about 4 years there, but
Yeah.
it's really great to come out the other side of it. And we've been amazingly well supported by, as I said, shareholders, but also just a really great engaged team. JJ mentioned we've got people that have been with us for 18 years, 15 years, 12 years, and everybody sort of just pitched in and helped out. And it's been it's definitely been a journey, and we'll be forever grateful for the fact that we got through it, but it was really hard in some of those tougher days. So it's really great to be on this side of it, and with a lot of positivity sort of moving forward.
On to the next question then. What's involved in establishing a new venue, and what stress does this place on the business financially? Rather than focusing on existing venues and wholesale growth, e.g. fit out, lease terms, renewal, teething issues, based on venue performance, 70 cents cheap, 70% gross profit, should this strengthen the business after the establishment period?
So the answer is yes. It definitely does take some bandwidth from from management to sort of set up. But what I alluded to before is we've got our head office structure is capable of bringing more assets, for example, venues on board. So we've got an amazing marketing team, which is a team of four if you include online marketing. Online store, and also some freelance. We've also got a finance team that we don't have to grow either of those teams in order to bring a new venue on board. So the bandwidth will really mainly be Justin and myself as we open up the new site, and all of the bottom line. A lot of the profitability venues are quite profitable, and we've now done the local tap house in St Kilda, the local tap house in Darlinghurst, which we then sold as well in 2017. Collingwood Beer Hall, Moorabbin Beer Hall, and we've been involved in the development of two different sites at the airport as well. We've therefore developed a lot of IP in terms of how to roll these out, and we know what to look for. We've got a really great team of people that we put together, including kitchen consultant, included design consultant, including some of the other sort of consultants that you use, services that you use to put this together. And we've learnt a lot along the way that you spend more time in the design phase and less time in the construction phase, because that's how you run a really tight sort of budget for rollout. So we're really confident, and plus with the work that we've done with spectrum analysis to really understand the demographics and the demand side, we are really confident that we'll be putting our best foot forward. Every single new venue always comes with risk, and there's always that moment where before you open, you go, shit, I hope people show up, and and I hope people come and enjoy our beer and our food and our hospitality. It's always pretty nervous. And interestingly, the build-up period for our venues has always been pretty quick. It's not like it takes a year to get going. It's usually within the first 2 to 3 months.
Yeah, and I think the other thing that is worth noting on this question is that each time that we've done a new venue, we've felt that it's got easier in the sense that we've got far more capability than what we had 10 years ago or 18 years ago when we opened the tap house, and we were making it up as we went. And we're now in a position that it is very replicable, and we do have a team that is big enough and skilled enough to be able to roll these things out in a really efficient way in terms of from the recruitment point of view, from a training point of view, from a team structure point of view, and then even from a product point of view in terms of menus, wine lists, these sorts of things. There's a lot of work that is already there and has been done that we can roll out in a new venue quite efficiently, and more efficiently than we ever have before. So we've got really good, really strong confidence that we can roll these out, as seamlessly as a new venue can be rolled out.
Become one of your core competencies.
Yeah.
100%.
All right, moving on. What do you see as the biggest challenges to hinder your achieving your immediate objectives for the business growth in the coming 3 to 5 years? Biggest challenges to your growth.
Well, I mean, as we alluded to before, growth costs money in a whole bunch of different ways. You need to be able to sort of invest in order to grow. But there's also a happy medium where you can grow sort of sustainably. So I think growing in a way that's really strategic and not overextending ourselves is really important. We've learned a lot over the last 18 years in business, but more specifically over the last 5 years. And that's why we don't like debt is, while it's really useful and really helps you get some capital, you've got to get that mix right between debt and equity. So getting equity on board is really important. In terms of other hindrances, I mean,
I think the one that gets a lot of airtime at the moment is that young people aren't drinking, or they're choosing more healthy, more moderation, and I think the venues play a huge role to mitigate risk as well. What we're not seeing now, essentially, if someone's in their drinking habits, we're gaining in people bringing their family to our venues because it's a family-friendly environment, and we're selling more food than we ever have, which still provides for a very profitable venue. So I think that combined with our non-alc beers that also mitigate that more from a beer perspective, and I think there are still enough people consuming, and we notice it even with the big high-profile Dry Julys and Feb Fast of the world don't have a material impact on the business. So even in those times, so I think there is enough of a market still out there, despite those choices that people might be making.
I agree. And the other thing I'd say is if we were Lion or CUB and we had, 45% market share and there was this sort of trend, I think you'd be a little bit more maybe worried. But because we're 4% of the independent market and therefore 0.4% of the entire Victorian market, right across beer, we can even in a market, even in this this sort of market, we can pick up market share, and it's about executing really well. It's about having really great beer. It's about really knowing who we are in terms of our brand positioning, what we stand for, our sense of purpose. It's about having really great team and being able to execute really well. So great relationships out in the trade, being able to do what you say you're going to do, and then being able to talk to our consumers in a way that is authentic, and really kind of connecting with our market. And I think we can do that, and I think we are already doing that, and I think we can continue to do that. And I think the marketing team and the wider team is doing a fantastic job. The sales team is firing on all cylinders. We just put a new rep on as well for the Southeast, and with some really great experience. Got a good team, and we think we can really continue to grow. And the results speak for themselves over the last 2 years in a relatively challenging market. We've continued to grow at 25%, 30% wholesale growth year on year, which is really encouraging.
Good. Next question. Do you have plans to raise again in the next 3 to 5 years in order to accelerate again or for any other reason?
No plans, but it's certainly not out of the question. It won't happen within the next couple of years. And also, just to be clear, I think you'll know more about this than I will, Mark, but I think we've reached, I don't think we'll be in a position to crowdsource fund again. This is our last opportunity to do CSF, because after this, our revenue will be too high for the threshold that is allowable. So if we do, and it'll be through one of those options that are available, whether through strategic investment, through family office, private equity, potentially IPO, not out of the question as well. But there's no immediate plans for that. And the whole idea of adding the venues is that the profitability of the overall business improves, and then we can start to self-fund growth. And in fact, just to put in perspective, it costs roughly $4 million or so to set up a new beer hall. What we're getting from the crowdsource funding, or what we're allocating from the crowdsource funding towards that, is obviously far less than that. And that's because we've now got an established brand that draws crowds, and so landlords will invest a proportion of that as well. And then we do get some debt funding for a new venue as well. So it's basically a combination of developer contribution or landlord contribution, some debt funding, as well as our own equity. And once we've done that first one, we'll be able to self-fund the one beyond that. So that's why we're saying no, we're not expecting to pay dividends, because we will continue to reinvest our free cash flow into growth.
And that's an important point for all of you that are still with us and listening. This is your last chance. If Stomping Ground continues the growth that they've had, they are too large of a business to qualify to raise funds by this method any longer. And in fact, they are the largest business in the sector that's come to market this way. So it's a great opportunity to get in on the ground floor and be part of the ground crew. Question. What is the information provided to investors on the company, i.e. twice a year, once a year, et cetera, greater communication, and how?
So at the very minimum, it'll be an annual report, which will have all of the financial results for the previous year. But aside from that, as Justin alluded to, we've also engaged Craig Williams to be effectively a a liaison with our investor group to keep them informed of all sorts of things, not just financial, but limited releases, new venue events, all of these sorts of things. So the plan is not to just get investors in and then never speak to them again, other than once a year at an AGM or through our annual report. We really want people to be part of the community and engage with us from not just a financial point of view, but from a community point of view. So yeah.
Yeah, and you've embraced that. When we started our discussions about raising through this mechanism last year, that was a key point for you to bring your investors on as brand ambassadors. And I think you've really embraced that, and the infrastructure you're putting behind achieving that is remarkable. So I think that investors will have a very good experience in that regard.
Thanks, Mark. One of the things that we were really concerned about with crowdsourced funding is sometimes, there's been mixed results from investors in terms of their, how they've gone about it. And from our understanding, there's some that have loved it and have got a really lot out of it, and then some that have been a bit unhappy with it. And when we did a bit of our own research and started asking around, one of the key things was that engagement. And so we've spoken to companies that have done it and done it well, and we've spoken to companies that have done it not so well, and investors who have invested in companies that have done it well and not so well. So we've learned a lot from asking other people, and one of the key things that we want to do is really engage along the way, and not just pay that lip service, but actually do it through the investor rewards and that community building. So that's an important part to us.
Back to the questions. Here's a good one. If I invest, will you bring back the bunker porter? More seriously.
Well, actually, it's only weeks away, isn't it? In 2 months away, we're hearing.
Is it May or
in
April?
Cairns? The great return of the bunker.
The bunker's coming back in May. So we do love it as well. So thanks for that.
We should have blackmailed that person to at least invest before we told them.
Yeah, that's right. Actually, if you invest,
yeah, more seriously, he's got to follow up. The venue strategy is clear, but what is the strategy for expanding packaged beer interstate?
There is no plan for expanding packaged beer interstate at this point in time. Our expansion of packaged beer is all Victoria in the short to medium term. We've got so much growth left in Victoria, and we kind of once upon a time we thought we might want to really go for a national footprint, but then we realised that it's much more efficient from a freight point of view, a logistics point of view, like a warehousing point of view, a marketing point of view, a sales point of view, to really focus in on a tighter geography, because it allows you to go hard in that geography and defend that and grow it from a position of strength from platform, rather than spreading yourself too thin across too many markets and doing them all badly. We really are focused on doing Melbourne and Victoria super well. And like I said, it's not a never say never for interstate, but if we do go interstate, we would want to do that with bricks and mortar, so a venue in that space to create that sense of belonging and that sense of bricks and mortar in that geography, and then we would use that as a platform to grow the brand in those geographies. But there's no immediate plans for interstate. It's all about Melbourne and Victoria for the next short to medium term.
And that goes along with what you said earlier as well about not expanding too rapidly, getting ahead of yourself, spreading your resources too thin. And I think you're the poster child for this business model, which is really the most successful business model operating in the craft beverage industry at the moment. Your backyard. You conquer your backyard before you go somewhere else.
Well, I mean, we've got a lot of friends in the industry as well, and because it's a really collegiate industry, so we kind of have a lot of friends who have been interstate and had beer interstate, and it's really challenging unless you're in there in a really meaningful way. So doing stuff And so if you are going to do it, you really want to go in behind it quite hard from a marketing point of view and a sales point of view, rather than just sort of dabbling, because then you're spinning the wheels without a lot of traction. So getting and going really deep into the local market, especially with so much headroom for growth, is our strategy over the next short to medium term.
Alrighty, moving on. The market has been especially competitive in the craft sector. How do you see the market now, especially competing against the big players such as Bolter, et cetera, and consumers' willingness and ability to spend on craft beer?
Do you want to answer, or do you want me to?
Well, it's definitely competitive. I think everybody realizes that it is a really competitive market. I think one of the reasons that we've spoken about, that is one of the reasons for the success we've had over the last few years and the growth that we're continuing to have despite that competition, I think, is maybe 5 or 10 years ago, you'd go into a bottle shop with $50 in your pocket and you'd take a speculative pick on some new brand that you hadn't heard of. Perhaps it was an experimental style of beer, and you'd take that home and enjoy the excitement of something new. And I think fast forward to now, with cost of living pressures and that $50 meaning a little bit more in your pocket, when you go into that same bottle shop, you're not going to take a punt on something you've never heard of, or you'll be more reluctant to take a punt on something that you've never heard of. And I think the 10 years that we've spent building a strong brand that has now got a reputation for quality beer, reliable beer, and now beer that's available, to everyone through our ranging in Coles and ALM and also Dan's and BWS. We're really accessible, we're reliable, and I think that despite the competition, they're the sorts of choices that people are now making, as opposed to the earlier days of craft where you would take a punt a bit more often.
Yeah, and the other thing I would add to that is, these markets and the dynamics of the industry tend to be cyclical, and right over the last however long, we've seen a lot of breweries, in pain, but I think they're now emerging out of that. I still think there might still be some consolidation, whether some breweries amalgamate, whether there's some M&A activity, or whether there's even another player that comes into the market that kind of tries to do a bit of a roll-up play. We've explored those sorts of things as well as you must, in terms of joining forces with other brands, that are maybe strong in other markets, and creating some sort of newco that has strong brands in non-competing markets. So I think there's certainly things that you can do in that space. But I think what we've learned as well is if we just execute really well on our strategy and our plan, that gives us our very best chance of success at the moment. And when you do those sort of roll-ups or consolidations, some of those synergies that you think you might get on paper are very hard to realize. And luckily for us, we've got Mike on our board who's been involved in a lot of this sort of stuff, and he's got a lot more experience than we do in this sort of stuff. So he can kind of say that through his own experience, that sometimes it's a lot harder to realize those synergies than you think might be the case. But having said that, there's definitely going to be some more consolidation. There's some more sort of consolidation in the market. It is competitive, but for us, we feel like it's getting less competitive, because I think the big guys have kind of taken their eye off the ball a little bit, and can't really do what we're doing. And I think some of the little guys don't have the resources that we've got to really kind of execute to the level. So,
well, I think a lot of the smaller guys are focusing on their own backyard and tap rooms and smaller venues, rather than trying to be a statewide presence or a national brand and those sorts of things. So I think that helps us. And like you said, the big guys caring less about craft than they have done in the past. They've got a stable of brands that they roll out pretty much everywhere and don't really support them massively, which is another opportunity for us to have our team visiting venues and bottle shops and talking up, great beer.
And just to sort of punctuate that, for example, you talked about Bolter and you talked about some of the other acquisitions that the big guys have made. over the last couple of years, all of those acquisitions, they've taken reps away from those brands in their non-home market states. So Four Pines now has no reps on the road in Victoria, for example. Bolter has no reps on the road in Victoria. Yeah,
Green Beacon.
Green Beacon, no reps in Victoria. So all of those acquisitions, they're not being supported to the same extent that they used to be. And so slowly but surely, those brands, aside from maybe one hero brand from their portfolio, will start to fall away.
That's enlightening. Thank you for that. Is the Geelong venue a fit out of an existing building or a new site? And will there be a brewery on site?
It is. It's kind of halfway in between. It was destined to be a hospitality. It was 3 hospitality venues actually, and it's been combined into one. So it has permits and licenses, which is why we can say with confidence it's not going to be long until we open it. And September, October is really realistic.
Existing building, new fit out.
Yeah, and from a brewing perspective, yes, it will have a brewery. It'll be a small brewery that will do some beers just for that venue, and
the local,
just that venue
and the local market, like on premise.
Yes,
Kegs.
Yeah,
keg only.
Do you see the grey alcohol market impacting you?
No, as in
No.
imports, as in grey imports? Not really. I mean, that was a thing when imports were huge and like beer coming in from America, rather than through direct, through official channels, was coming in through grey importers. And I guess, maybe stuff coming in from Europe that's super cheap might have an impact, but I just don't think we're competing in that same space. We're competing in different space.
Sense. Moving on. How do you manage the overlap regarding opening multiple venues at the same time? In your current facilities, how much headroom do you have before you need to expand the brewing capacity?
No, so there's 2 parts to that, Chris.
There are 2 parts. From a venue perspective, there's no plans to open 2 simultaneously. It'll be one after the other. So we're feeling pretty comfortable and capable on that front. And then from a brewing perspective,
one of the things I mentioned before is just in terms of our production capability. The bulk of our production happens at Collingwood. We've also do some production at Moorabbin and some at the airport. We'll do some at Geelong as well, small amount. But we also have a relationship. We've got outsourced production capability as well, which means that as we grow, we don't have to necessarily invest in more brewery capacity and more tanks, and we can continue. Like some of the people that have gone before us that we really respect a lot, a la Garage Project and a few others, have managed to really stay true to their product and to their brand at the same time as outsourcing production in a strategic way. And we've developed that capability over the last 6 months, which means that we can continue to grow without any kind of ceiling to our growth and our capacity.
Good. What governance will prevent share dilution?
Again, all shares will be the same class, and in terms of the Constitution, basically governs the way all shares are handled. So the Constitution, I believe, will be available via the link. Mark, is that right?
Correct. Yeah. Everybody will be able to see the Constitution of the company on the landing page where the offer document will be posted, and there's also a summary of shareholders' rights in the offer document itself.
So, and the answer is, if we do raise capital, everyone has the opportunity to participate in that equally on a pro rata basis. So there's no reason why you can't participate again down the track. It won't be as a CSF for the reasons we discussed before, but it doesn't mean that you can't participate in a future capital round if there is one. And everybody will be in the same boat. People sometimes get a bit nervous about dilution, but dilution is not necessarily a bad thing. If you've got a smaller percentage of a much bigger pie, that's not necessarily a bad thing. So you don't, it's not the percentage that you can take to the bank, it's the value. So if we can continue to grow the business and it means that we bring on capital in order to do that, that's not necessarily a bad thing. That's good for everyone. But important thing to note is that all shareholders have the same share class, and we're all in it together. And there are preemptive rights and shareholder protections in terms of drag and tag clauses within the constitution. So we're all in the same boat, as opposed to some of the others that I've heard about that have different classes of shares. We want an alignment of interest. We want everybody to be in the same boat and all be treated the same.
For that. A 60-40 revenue split between venues and wholesale indicates that any substantial growth would be from the wholesale side of the business. How do you see this happening over the next 5 years?
No, I think it's not really the case, because I mean, as the wholesale side of the venue side of the business grows incrementally, so you're not going to get 30% growth from existing venues. You might get 5% growth, maybe just a little bit ahead of inflation, or you might get 10% if you're doing super well. But the way the venue revenue grows is through the development of a new site like Geelong and or other sites. And that's a step change in revenue. But the wholesale growth is that more sort of scalable. That's not necessarily a step change. That's ongoing growth through. I mean, when we look at our growth and what's driven that over the last sort of 2 years, it's not only new distributions, but it's also volume per distribution, which means that not only are we winning new distributions, but our consumers are becoming more aware of us and choosing us off the shelf and off the tap, so that our volume per distribution is actually increasing as well. So that kind of really amplifies the growth. So the growth is not going to just come from wholesale, it's going to come from both new venues and wholesale.
Here's one about your retention schemes. What management, including executive directors' remuneration, rewards, and retention schemes are in place? E.g., are there share options?
There aren't any share options at the moment, but and there's no immediate plans for them, but we really like the idea of it. One of the things that this process has I keep on talking and not letting you talk. Sorry, mate.
People need to get to know us, and that's kind of how it works.
So one of the things that this process does is that we have a share registry called Sharesies that we've engaged, and through a platform like Sharesies, all shareholders can kind of have access and visibility of their shares. And one of the things that Sharesies offers is a way of doing employee share option plans. And we really like the idea of rewarding and retaining staff through employee share option plan. We don't have anything in place. Well, that's not entirely true. Like Asher is a shareholder. And so is Fab. That was originally via a share option plan that he allowed to that Asher allowed to vest. So we do have technically like a framework for it, but there's no actual plans to put that in place at the moment. But I'd like to do it, and I really like the idea of it. I think you do too.
Yeah, I do. But also, I think just more broadly about retention, from a strategic point of view, we have invested in a people and culture team, probably or almost certainly ahead of where most businesses our size would. So in 2017, when we had about 60 employees, we put on a head of people and culture. And the reason for that is our belief in the need for a strong culture within the business for it to be a really good place to work, but also the belief that attracting and retaining the best people is crucial. It makes financial sense, but it is crucial to the culture of the business. So in terms of a retention strategy, we have continued to invest in the people and culture function. We put a lot of time and energy into developing people, and our retention sort of stats would sort of speak for themselves on that front, that it is something that we have been successful on so far, and we intend to continue to be.
And just to finish answering that question, we do have a bonus scheme in place for our sales reps. Do the venue managers have a bonus scheme in place?
We'll get into that separately.
Okay.
Yeah.
But then, and then in terms of our own remuneration, we don't have a like a share option plan in place for executives or for senior management. But I think that especially for the team, I think it would be nice to put something in place so that people who work for us and with us benefit from the growth of our business down the track. So it's like I said, we've got to do one step at a time. There's nothing in place at the moment, but I like the idea of it a lot.
For that. All right, we've got 10 questions left, so we'll see if we can get those wound up by the top of the hour. We'll press on. What's behind the rapid uptick in EBITDA in the first half 2026? Is it seasonal or cost down, or is it simply flow through from some increase in revenue, or a mix or something else?
Great question. It's a few things. One of the things is the cost reduction, both head office as well as in the venues. Our cost of goods are in a really strong place, but there has been that sort of 30% uplift in wholesale sales, and so profitability is growing because a lot of those fixed costs sort of remain in place even with increased revenue. So it's not the variable component isn't as big. So as revenue increases, more of it drops into the bottom line.
Here's a thoughtful question. Do you intend on having a more diverse board into the future, i.e. a woman or other diverse perspectives? Otherwise, how do you ensure you are building the right community in the community?
That's a really good question. And diversity is something that is hugely important to us, and something that we have always reported on and had as a topic of conversation. Our leadership team is far more diverse than our board, and the board is really a function of the fact that there has only been the co-founders initially and our initial investor that have been on the board. But certainly, it is something that we're conscious of and something that we think that we certainly value. And the leadership team is far more representative of the kind of diversity that we would like to have. And the way that our board and leadership team kind of operate is that the leadership team has significant input into the direction of the business, the key decisions, and how we go about things. So we feel like we do get a representative voice of that diversity at that level, despite the fact that it might look a little bit like there is a lack of diversity.
Three white guys on the board, but it's just it's not by design. Three middle-aged white guys on the board.
Yeah.
Thanks for that. I think the fact that you have a board composition the way you do, again, is running ahead of the size of your business anyway, and having the capabilities that you do, and the things that Mike brings through his investment experience are, they're fit for purpose for that point of view, and your leadership team demonstrates your values in that way, in a different way.
Yeah, and they're more the execution, executive sort of leadership anyway. So really drive the execution.
All right, I appreciate the need to reinvest in the business in the short to medium term. Is there a longer term view that dividends would be paid to investors?
Yeah, so like I think we mentioned earlier on, once we get our business to a really strong and profitable, sustainable model where growth or massive growth is no longer the imperative, or strong growth, and that profitability is there, there's no reason why dividends won't be paid. It depends what happens, because there's also the way investors can make a return on their investment is either through dividends down the track or through some sort of liquidity event that we spoke about before, and those are all open and they're all possible down the track. But
the perks
and the perks as well. That's another type of return. But we're really focused on just building a strong, profitable business, there's always the opportune time. Mike tells us that these things have a natural kind of way about them in terms of it feels like it will be the right. We'll know when the right time is to for whatever the next step is.
Very good. Well, here's another effort to get you to make a beer again. As long as we're requesting return of previous beers, have another run at the Spicy Marg Sour.
We'll put that into the NPD program.
Spicy mango.
In exchange for investment, right?
Yeah, correct. Any other special requests for beers while we're at it?
I can assure you New South Wales will appreciate the beer once it comes. Do you have a contact with a tap house you used to own in Darlinghurst?
Not anymore.
Well, didn't one of the guys buy it? Like Josh, was it Josh, or I think one of the brothers bought it? But yeah, no. Look, the thing, it's hard for us to. It's not that we can't make enough beer for New South Wales. It's that if we do New South Wales or Queensland for that matter, it means we have to have a local warehouse. It means that we run into all those challenges around fresh stock, around managing logistics, and that's just not the way we want to do it. If we were to go interstate, we would want to do it in a meaningful way. That we could really support it and support it properly, and then grow in that state rather than just a little bit of a dabble here, dabble there. That doesn't benefit us or anyone.
That's a point you've made. So yeah, that's valuable. Interesting to hear you talk about your plans of growth in sales and marketing. I may have missed it, but how much capacity does your product facilities have for this growth before needed expansion?
Yeah, so you did miss it, and we spoke about our existing capacity, but we also spoke about the fact that we've got outsourced production capability as well, which means that we have no limit. We're not limited by our own capacity because we can outsource production if we need to, if and when we need to, and we've already developed that capability. And we're following in the footsteps of some other really respected brands that have done it in a way that doesn't compromise on product, doesn't compromise on quality, but provides really important flexibility and headroom for growth.
You had one go at mergers. Would you contemplate a merger or partnership with a complementary company, interstate and or otherwise? There is also many distressed brewers around Oz. Is it worth kicking the tires on any of these companies or assets?
I think we answered that question already, Mark, but I'll answer it again. We have had conversations in the past. There is, obviously we're always open to listening and to exploring, especially for complementary businesses with good culture and good brand that really kind of is complementary with ours. It is, from our understanding, a lot more difficult to realise some of the synergies and benefits one can get from geographically dispersed operations, and the ones that are in the same geography, then there might be opportunities there, and we'll always explore them and listen. I love having lunches and conversations with other people and sort of exploring those ideas, but it's not on the immediate horizon, that's for sure.
Thanks for that. I see cost reduction in venues and improved structure as key drivers for your FY26 EBITDA targets. Regarding your physical supply chain, printed cans, corrugated boxes, tap decals, beer coasters, etc., are these currently managed through a direct-to-manufacturer relationship or via third-party procurement? If internalized, it could improve your cost per unit as you scale up.
Yeah, so give us a call afterwards and give us your ideas later. We've got some pretty good arrangements with a lot of our suppliers, and we do it direct. We also do it through third parties at some through the outsourced production side of things. But we're always looking at ways of improving our unit economics, and that's cans, cardboard, grain, hops. We have tested our pricing against by contacting other breweries our size and bigger, and we think we're on a pretty good wicket for most of these things. Is there still room for improvement? Probably, and it's not just on the brewery side of things; it's also on the venue side of things. Glassware, waste management, other consumables that we use in the venues. There's definitely an opportunity for procurement to drive costs down, and so there is opportunity to to really drive that cost down, get not only just cost of goods, but also consumables and other sort of expense line items on the P&L. So absolutely. And if you are in procurement, give us a call and let's talk.
Very good. All right, last question. Thanks everybody for staying with us. I'm interested in the transparency of the exec ops team. What is the biggest operational mistake the business has made in recent times? What impact did it have, and what did you put in place to ensure that it's not going to happen again?
I missed the first part of the question. Did you hear it?
Sorry, can you go again with that one, Mark, please?
And it began. Interested in the transparency of the exec ops team. What is the biggest operational mistake the business has made in recent times? What impact did it have, and what did you put in place to ensure one wasn't going to repeat?
Good question.
Can you think of something? I mean, we've made plenty of mistakes along the way. Don't worry about that. But
well, I mean, you could.
which one? Yeah, I mean, there's lots of examples of beers that we've made that have ended up being not what we intended them to be, and
well, I think
we've had to pivot.
Maybe a good example is an MPD product that didn't have the success that we would have liked.
Ah, yes.
That probably predated an MPD process that we now have in place. So we had a product that we launched with big fanfare, thinking it was going to be the answer, but it hadn't probably gone through the rigor that it needed to do in the process, in the MPD process, and that precipitated a complete reworking of how we do MPD, which is still very much a process that's open to ideas from any part of the business for products or new products, new beers, those sorts of things. But there's far more rigor around the purpose of each MPD item, why we're doing it, what we think the size of the pie is for that potential product in the market, and just more chance of success because it's been stress tested a little bit before it's actually gone to market. Whereas before we kind of shot from the hip, and we spent a fair bit of money releasing a product a couple of years ago that we now still have empty cans of, that we're looking to dispose of, and they won't go into the bloody 10-cent machines because they haven't got lids on them.
But just to be clear, I don't think there's also anything wrong with that. Notwithstanding the fact that we have learned and we've got more rigor around our decision-making process, I don't think there's anything wrong with being fast to fail. And I think one of the things that you can get stuck on is trying to always do the perfect thing, and at the expense of doing something at all. So I think sometimes being quick to market and being able to put something out relatively quickly, albeit with a greater level of rigor, is important. So as much as that was a fail on our part, I think I'm not sorry we did it, because you learn along the way, and I think you need to be able to build that capability of being able to get something out to market when you think that there's an opportunity.
Well, I'd like to thank our audience for your time today and to learn about all things Stomping Ground. And Guy and Justin, thank you so much. Your passion is evident, and wishing you all the best.
Thanks,
I will
Mark.
say once again, this has been recorded and it will be available on the platform. So, Guy, Justin, thanks again.
Thanks,
Mark.
Thank you. Thanks, everyone.
Thanks, everyone, for joining us.
Cheers.